Welcome, everyone. I'm Elaine Provenzano, and the Tuckahoe Library is so excited tonight to have our two guests with us. And let me just put the spotlight on them. And I would like to make introductions. Kevin Chen is currently Chief Economist and CIO of Horizon Financial. He is Adjunct Associate Professor of New York University. He has a PhD in Finance from the Financial Asset Management Engineering Center at the University of Lausanne, Switzerland, a master's degree in Finance, the Center for Economic Research, Tilburg University in the Netherlands, and a BA degree in Economics from the Renmin University of China in Beijing. Earl Carr is the Chief Global Strategist at Pivotal Advisors based in New York City. Mr. Carr possesses over 20 years of experience working in the private sector and nonprofit business organizations, and is a columnist for Forbes. Earl is also an adjunct instructor at New York University's Center for Global Affairs. He received his undergraduate degree from the College of William and Mary in International Relations and attained his master's degree in International Affairs from American University. Mr. Carr is a board member at the Association for Diplomatic Studies and Training and a board director at the Global Institute of Financial Professionals. And tonight, they're going to share with us the book From Trump to Biden and Beyond, Reimagining U.S.-China Relations. And so I'm going to hand it over to you, gentlemen, and we look forward to the program. Thank you.
Thank you so much. Welcome, everyone. Elaine, thank you for those very extremely generous remarks. Excuse me, Miriam, thank you for those extremely generous remarks. And thank you for the extraordinary team at the Tuckahoe Library, which also includes Miriam as well as Swadish. The programs that you do are so important. So thank you for that. So today I just wanted to kind of set the scene on what's going to happen. We have some, we like to have an interactive style. And so we will have a poll for you to take, which kind of analyzes and gets to the heart of, how are people looking at public opinion with respect to U.S.-China relations. So that poll will roughly take a few minutes for us. So I'll start that in a little bit. After we do the poll, we'll then get into an interview with myself and Kevin. We have a few slides which will help to set the PowerPoint slides that will help to set the scene of some of the, really quintessential issues that are facing U.S.-China relations as well as China's economy. And the last, we'd love to open it up to great questions to all of you. There will be special prizes awarded to those who ask questions today. So please have your questions ready during the event. Okay, so first I'll go ahead and start the poll. All of you will be able to see the poll. For those joining us currently, we're just going to launch a poll and you all should see it here. So once again, for those of you who are joining, do all of you you could just give me a nods up or if you see the poll. Okay, great. So we'll have a few minutes. We'd love to get roughly around 85% participation rate in the poll. So as you go through the questions, it's pretty brief, about 4 questions altogether. And then we will be able to tabulate the results. Okay. So I will end the, just let me know when you guys, it's about 5% participation. So you guys take your time, about 20% done now.
Wow, it's going up quickly. Nice.
All right, almost half. We almost have 50% of people who have completed the poll, 55 now. All right, let's see if we can get 90%.
It's actually pretty easy, just a couple of clicks of the choices.
And Kevin, I think we had like 80, I think we had like 80%, 85% at the
Last time.
Bronxville Library.
Yes.
So, so Tuckahoe, you can't let Bronxville, you know, overshadow you. You've got to be able to, you know, definitely beat Bronxville. All right, we're at 83%. Can we get higher? All right, 88. All right. 94%. All right, you have clearly, you know, set a new trail with respect to the poll. All right, can we beat 94%? I think that going once, going twice. All right, we will end the poll. All right, so I'm sharing the results right now. And let's just read the questions. I'll go over and read them. So the first question, are you concerned about the future direction of US-China relations? We have overwhelmingly 71% said yes, 0% said no, about 18% said very concerned, and about 12% said not sure. Okay, that seems to be in line with the poll that we have done in the past. Question number 2, are you optimistic about the future of US-China relations? 47% said yes, 24% said no, 6% said very concerned, and 24% said not sure. Interesting. So we had about the same percentage said between no and not sure. That's actually new. We haven't quite seen that one before. Question number 3, what issue are you most concerned about in US-China relations? First, a potential military conflict in the South China Sea or the Taiwan Straits, 24%. Question number 2, stealing of intellectual property and or cybersecurity attacks, 12%. An economic trade war, which can hurt both US and Chinese consumers, 29%. And answer number 4, the rising popularism and nationalism in both the US and China, with the highest percentage of 35%. All right. Last question. What issue are you most optimistic about in US-China relations? First answer, the promotion of cultural exchanges between the US and China, particularly in study abroad or international conferences, 29%, we see. Engagement on climate change and or clean energy technology, 53%, wow. That is a record. We've never seen such a high percentage for engagement on climate change, so that's significant. Engagement and cooperation on combating transnational crime, we've got 6%. And last, a provider of labor-intensive goods and services to American consumers, we got 12%. All right, so this is great. So I'm going to stop sharing. Thank you for all of you who participated in the poll. And I'm going to share my screen right now and just walk through a few slides in our PowerPoint presentation. So when we think of China, I think it's critically important to think about.
I'm just going to ask everybody to please remain muted.
Sure, thank you, Elaine. So as I share my screen, you know, one of the things when you think about China is that I've got to share. Okay, here we go. All right, can you all see my screen now? You
Yes.
guys just give me a nod. Okay, wonderful.
Yeah, we can see it.
Okay, so I think it's important, you know, when we look at just the book in itself, it's divided into a number of different chapters. And so the first chapter looks at how the United States and China can both compete and cooperate through aspects such as manufacturing, technology, and innovation. The second chapter, which is written by Kevin Chen, looks at kind of, you know, how Chinese companies can be listed as well as delisted off the US stock exchanges. And this has been in the news a lot lately. Chapter 3 looks at the competitive energy landscape between the US and China, Obviously, this plays important prominence when you look at the shortages, particularly in energy. There's been a number of blackouts in China, and we've had a number of issues with respect to climate change in both countries. Chapter 4 looks at how the United States can and should engage Latin America and the Caribbean. We've seen significant economic investment by Chinese companies in the Caribbean and Latin America, and the United States is developing under the Biden administration a new policy. Chapter 5 looks at the big question: what can and should be China's economic presence in the African continent? One thing that China really got right were the demographics in Africa. Africa will have one of the largest middle income economies, but when you look at the young youth that are growing in Africa, China really got the demographics right in Africa and have invested heavily in the continent. Chapter 6 looks at Chinese economic engagement in the Middle East and the Gulf states in particular. Historically, there's always been the United States have played a role in guaranteeing the security of the Gulf states, particularly in the Straits of Malacca. But that's being challenged right now because China's economic prowess and being able to provide economic incentives has many countries in the Gulf questioning whether or not should economic considerations play more of a paramount importance than security. Chapter 7 looks at the fundamental question of our allies, and in particular, South Korea and Japan. And what does a rising China impact? How does a rising China impact our alliances in East Asia? Chapter 8 looks at energy and clean energy and climate change in particular. That's written by Dr. Jackson Ewing at Duke University. And as you think of one of the most quintessential issues facing climate change in both the United States and China, coal is used as a huge important factor in China. The air quality there's been recent flooding in China, and you see flooding in the United States and other parts of cities here. So climate change is a huge issue facing both the US and China. Chapter 9 looks at the huge black box that keeps most policymakers up at night, which is the issue of Taiwan. And if a military, Taiwan was recently in the news as CNN, Anderson Cooper asked President Biden, would Biden come to the protection of Taiwan if Taiwan was attacked by China? And he said unequivocally yes. That caused a huge uproar in mainland China, and it has important implications of things like the Taiwan Relations Act, which was established in 1979, which essentially is an agreement in which the United States would provide arms to help support Taiwan, but it does not explicitly state that the United States would in fact provide military personnel. So that's a very tricky situation currently. Chapter 10 and our final chapter looks at the Indo-Pacific diplomacy and in particular the Quad, looking at Japan, Australia, India, and what that means for the region. What we've seen in particular is the Biden administration has really tried to work more with allies in the region to have more leverage vis-a-vis China. So when we talk about China, I think it's critically important that most people think about tier 1 and tier 2 cities. Tier 1 cities primarily refer to most developed economies like Shanghai and Hong Kong. But what many people forget is that, in fact, the tier 2 and the tier 3 cities have actually been growing faster than tier 1 cities for the last 10 years. And as you can see from this chart here, they're actually tier 4 and tier 5 cities as well. And so China's economic and transformative growth has huge implications for consumers as well as multinational corporations as well. Kevin is one of the premier experts in things like fintech. And when we talk about fintech, obviously we talk about important transformations of how technology is transforming finance. Kevin, can you walk us through, as an economist, what are some of the broad and interesting trends that you are seeing in fintech in mainland China today with things like WeChat and others?
Sure. Yeah, interestingly, I think technology, including financial technology, or in short, fintech, is an area I believe China has developed very rapidly, and that's actually a lot of the those I would say the development are being introduced to the U.S. So in particular, I would say the big thing is about the payment system. So China went from I would say basically a society like every other country that you pay with cash and credit card, jumped straight into cashless society around, I would say, 5 years ago. So I've met a lot of people who told me that they used to live in China, Americans, they worked there, they were studying there, and about if they did not, if they came back to the US 5 years ago and they went again, they would totally not recognizing the life, because basically the life in China, all the payment, everything is based on the cashless payment now. You don't actually need to carry cash anymore, and actually you don't carry credit card either. So in the US, it's really, I think people mainly probably still pay with credit card, but in China, it's actually mainly your cell phone app-based payment. I would say that's a big development, and interestingly also that the payment company essentially is backed up by supported by Alibaba, right? And Alibaba started this because when they were doing e-commerce, so they were the equivalent of eBay or Amazon in China, essentially. So they were trying to create the Amazon of China, but they realized that at that time when they started about 10 years ago, no one in China had a credit card. So you can't really do e-commerce without a credit card. So they realized that they had to create fintech to basically help their e-commerce business. Otherwise, you still need to carry, cash around. That wouldn't work for an online e-commerce platform. So that's actually how essentially in China, the whole fintech started with actually a backing of the e-commerce company. And also, it's important to note that Amazon, in fact, sorry, not Amazon, but Alibaba is a company from China, but is actually listed in the US on the New York Stock Exchange. So in New York, in fact, if you go to the NYSE, the New York Stock Exchange, in the big lobby, there's a wall with, I would say over the past 100, 200 years, the key events happened at the exchange with pictures of, I guess, when Coca-Cola went public on New York Stock Exchange 80 years ago, things like when Warren Buffett, did something there, etc. And so I would say, I counted among probably 20 or so key events with a big picture on the NYSE wall. One of the bigger picture, in fact, I think one of the largest picture, in fact, it was the IPO of Alibaba, a Chinese company, public traded, listed on the New York Stock Exchange. And when it happened, it was the largest stock IPO, or initial public offering in the world, in the US. And so New York Stock Exchange, in fact, has been very proud of this. Essentially, the whole e-commerce or the fintech revolution in China, in fact, was started at New York Stock Exchange. So to me, I think it's a very symbolic event of the Chinese companies who had very good, very big success in the U.S. And obviously, it also, reflects the challenges now, because I think many of you probably have not noticed, those Chinese companies who are traded on the US, their stock price have been very weak. Using the example of Alibaba, the stock price is probably down from about 50% since the peak. And it wiped out something like, I believe today I saw an article saying that $430 billion wealth was wiped out from the decline. And in total,
Wow.
in total, the Chinese companies who are traded on the US exchange, the total wealth loss, I believe it's exceeding, $1 trillion. And so it's a massive wealth destruction happened, in fact, for the last couple of years. And people can ask, in this book, right, the title is From Trump to Biden and Beyond. So, there are more than 500 Chinese companies right now traded on the US exchanges. They brought a lot of capital, they brought a lot of jobs in service, accounting, legal. In addition, also helped New York to keep its position as the world's premier financial center. However, if you look at, there are a lot of also fraudulent activities of those companies from China.
Right.
Many of them, they cook the book, one actually, a coffee chain similar to the Starbucks in the US. The China
Luckin
version.
Coffee. Right.
Yes. And they realized that people realized that they were actually making up their revenue, and the company got delisted, and probably something like $6 to $7 billion was lost. And how to address this, right? So there's one side of thinking, which is to kick them completely out, shut down all of those companies, get them out of the US capital market. And the other extreme way of thinking is let's just keep them as it is, no change. And my view is that either extreme would not work, because these companies add up with more than $2 trillion wealth in the US, and they are creating a lot of good positive impact to New York, to America, and I think we should keep them. However, also I believe that we need more proper regulation to make sure that they follow the disclosure rules in the US. They're transparent. They get all the audit done properly and show the investors that they are honest with the money from the shareholders. And that's why I suggest in this book, in my chapter, that we don't recommend one of either of those extreme approaches, but let's regulate them but still welcome. That's really the chapter. Yeah.
Great, thank you so much for that overview, Kevin. And obviously, when you talk about fintech, and you talk about the extraordinary amount of wealth that Chinese companies have invested in the U.S. stock exchanges, in the era of globalization, I mean, all of this, in many ways, a lot of these topics are all interrelated with geopolitics, security, and trade and development. A military conflict in Taiwan or the South China Sea could have huge economic implications, obviously, for both the United States and China. Let's just go ahead and move on to the next slide. And I think it's important, as we think about, the current discussion on Evergrand Group, and when you look at the amount of corporate debt, both in the Chinese economy, can you help us give us a sense? What is your economic prognosis for the future of China's economy? You saw China's economy in the second quarter grow at 7.9%. In the third quarter, you saw China's growth now at 4.9%. Kevin, as an economist, how do you make sense of China's slowing growth, and what are the broader implications both for China's economy but also for the U.S. economy?
Sure. Yeah. So this is very complex, right? So the economic situation in China, it's a very complex topic. I would say to begin with, I personally believe, and I think it's agreed upon by most of the experts now, that because of the I would say the demographic challenge, there was this one child policy in China for 30 plus years, really reduced the number of people. In fact, the total number of the working population in China peaked in 2015 and has been declining for the last 5 years, and it's expected to decline for another 30 plus years. So that's a big picture, and that's the biggest challenge, because when you have a rapidly aging population and shrinking labor pool, the economy is not able to do very well. So I would not expect strong growth from China going forward. If anything, I think the growth rate will be just slower and slower going forward. That's clear. And I would say, the real estate bubble happened, and right now it's, real estate industry in China is having a lot of challenges, right? That's exactly what happened in Japan about 25, 30 years ago. And I wouldn't expect anything different, when you have a massive speculation of real estate, it will burst, just a matter of time. So these are the challenges, clearly. On the other hand, I would say the economy, the market in China is still very big. Most of the American companies we talked to from the banking, from the real estate, from retailers, from Walmart, from JP Morgan, from all those across a board, from Honeywell, those I would say industrial companies, they have been extremely successful in China. In fact, they have been, even, Starbucks, Nike, and those brands, American brands, they're very successful in China. And I think they are even growing better now, because in general, people in China are getting richer. When they are richer, they want a better quality products. And they tend to actually switch toward higher quality products or service from the American companies. And so in this regard, I think it's actually going to be even better for a lot of American companies in China, and also because of the excessive saving in China, I would say the investment return is declining rapidly. So there will be more Chinese capitals coming to the U.S. to invest. You can notice that in New York, right, the Hudson Yard development, when probably the largest post World War II development project in the U.S. It was predominantly funded by investors' capital from China. So that's, these are the very positive things are happening. And that's why on balance, I agree with most of people from the audience today's vote that the future, it is optimistic between US and China, in particular from I would say the investment cooperation culture exchange point of view. However, still the challenge is clearly there. And I see actually, Earl mentioned about the Taiwan issue. It is a big challenge. I don't think anyone wants a war. It would be such a disaster, if a war to break out. And I think people in China, they are sensible enough to avoid this. And I'm hoping that it's all just talk, but in reality, it will be really more, I would say, a better relationship going forward. Yeah.
Okay. Thank you so much, Kevin. I'll ask a few more questions and then I'll open it up for Q&A. So please get your questions ready. Kevin, it almost seems that you've given an overly optimistic kind of assessment when you look at, in the investment environment in China. You talked about companies like Nike, which I agree 100% that their profits have just skyrocketed this year when you look at their last earnings. But at the same time, it almost seems like it's a tale of two cities too, Kevin, where you've seen companies like IBM. It took IBM 10 years just to break even in China. You have companies like Google who went into China and then got out of China because the regulatory environment was too difficult. Just last week, LinkedIn declared that they're getting out of China. So can you give us a bit more color and context? It seems that it's like a tale of two cities. On one hand, the environment, there are both winners and losers. How do we make sense of that?
Sure, that's a very good question. So Earl, just to kind of put it, clarify this, my personal view is that to invest in China or for the US-China relationship, I think for the near term, I'm actually pessimistic that, I'm not actually seeing, situation to improve. In fact, I think things could actually deteriorate further. whether about investment in China, about many other areas that we can go into detail later on if our audience were to ask questions about it. So near term, I'm actually pretty pessimistic. I'm optimistic over the longer term. Because I think US and China, the two countries are great countries, and I think people are eventually are going to find a better balance going forward. As of now, I think there are a lot of imbalances that it has to be addressed, and I'm not optimistic about there will be a lot of fight, at least verbally. Maybe not from President Trump's Twitter in the past, but you will actually see more kind of here and there. So near term, I'm pessimistic. And for the American companies, what I've noticed, and also I think from a lot of surveys and all those, is going forward, American companies are going to be even more successful in China, but they're going to focus on the domestic market in China. So the whole, supply chain restructuring, etc., will be essentially, almost like Tesla, right? It's going to build more cars in China to sell in China, but they're going to also find, let's say, start a major manufacturing base in Germany, and essentially produce cars from Germany and then sell to other nations. In the sense that there will be more investment from the US to China, but will be actually more for accessing the domestic market purpose. And you mentioned about LinkedIn, right? I totally agree with you. LinkedIn, it's a very sad story that it's the largest, it's the last social network that's from US that was accessible in China. Facebook and Twitter and all those were banned in China a long time ago. So LinkedIn, it was already a miracle that LinkedIn was able to be, operative in China for so many years until recently they decided to completely pull it out. And that's it is pretty sad. I mean, the less communication, it gets worse, right? And also, if you look at the big picture, Bill Gates, founded Microsoft. And Bill Gates, I listened to one of his talk a couple of years ago, but I think it's still relevant, probably 3 years ago. He said, globally, Microsoft is very successful, and Microsoft has been in China for probably decades, 20, 30 years, but he said Microsoft is still losing money in China. And Bill Gates said, I went to China, I asked the leadership in China that what did we do wrong? Why, out of all the countries we're profitable, except in China, we're not able to make money. So, what Bill Gates said, I think is, it probably reflects the situation that, maybe for LinkedIn, they don't see the, potential to be profitable when they have to overcome so many hurdles. In the end, they decide just to, pull out of the market, right? And I think it's probably a similar situation, let's say, for some other technology companies, if their main business is connecting, let's say, whether it's social network or media. But on the other hand, I think, another, Caterpillar is, I would say it's a good example, and a very successful American company, one of the largest company in America, also very successful in China. They have been selling all kinds of equipments, construction equipments, etc. in China, one of the largest market for Caterpillar. So, since, I would say you need to really differentiate. And if you're able to, whether it's about Tesla or those firms, you're going to be very successful in China. But, if it's, for, I guess, like Facebook, etc., it's very difficult. I mean, it's close to impossible. You see the same thing that Google has pulled out of from China a long time ago. And I think it's going to be the case going forward too.
Great. Thank you so much for that very detailed response. Everyone, please get your questions ready. I'm going to ask one last question. Kevin, how do you respond to the criticisms that the Chinese are eating the US's lunch? That was a quote from President Biden. There's this notion that the United States provides a fairly free and open economy where Chinese companies can come and invest, but there seems to be a double standard when American companies go abroad to China. There's been a number of issues of stealing US intellectual property rights, just recently with cyber attacks. How do you respond that essentially that this is not an equal playing field? How do you respond to these criticisms? And if you can tack onto that, you talked about the stock market with Chinese companies investing in the United States. Well, for some of these Chinese companies that have listed in the United States that US investors, maybe some people on this call have invested in, and they've lost money. What and how should we think about that?
Yeah, I think that's a very fair question. I tend to agree with you, Earl, that it's true that in fact for the past 20, 30 years, China has not been playing fair. It's clear. And I think originally, I would say when Bill Clinton signed the agreement to let China into the WTO, at that time, China was a very poor country. And I believe at that time when Bill Clinton was president, when he agreed on the WTO access for China, China per capita GDP was around probably $500, $800 range. So at that time, US was probably 20, 30 times richer than China. And, I think the thinking was, it's a large market. And I was at some of those, events with the CFR, etc. And they said, at that time we thought, we just, let China to be part of the global economic system, and they will be part of the, global manufacturing base. That will be part of the global economic system, WTO, World Bank, IMF, and all those. And on the other hand, there was also some, I would say, implicit or explicit arrangement in the sense that China was running massive trade surplus from the US. But on the other hand, China was recycling most of those wealth into the US capital market by buying the US Treasury bill. In the sense that, yes, China was making a lot of money from the US, but also putting the saving into the US. So that was actually very helpful to the US economy, keep the interest rate low, keeps the mortgage rate low, etc. So it was, I would say, the arrangement that, China was, I would say, was getting a very good deal from the US, because China was a very poor country at that time, and as a very poor country, as of now, almost every poor country or extremely, poverty, a country in extremely poverty, they actually can get a lot of preferred terms in trade, market access, etc. It's not reciprocal. But I think it, on the other hand, now it's very different versus 30 years ago. China is a much richer country now, and the market access issue, intellectual property issue, and all those, it has to be addressed. Whether President Trump or President Biden, I would say any president. In fact, President Obama was looking at the same issue, right? So I think it's becoming a consensus. I think within the U.S. that a lot of those past preferred treatment, I would say a lot of market access, etc., needs to be rebalanced. And I believe, a lot of people in China, I think, for the entrepreneurs in China, like Alibaba, etc., they are very familiar with the American system, capital market, etc. And I think they are in pretty much in agreement with a lot of those adjustments need to be done. I think the question is how to get it done in a non-disruptive way and make it more, collaborative. And, I think the worst thing to happen is to have some, disruption, right? whether it's about, supply chain disruption, or, about the capital market, about, the right now there's a global financial energy crisis. In fact, this year, China has been buying a lot more natural gas from the US because there's a major energy shortage. And I think for the last several months, China actually has been buying a lot of natural gas, and even I believe they're signing agreement for the next 10, 20 years of long-term purchase agreement from the US. And also China has been buying a lot of soybean, wheat, and timber, and all those from the US. So all this, I think, are moving towards the right direction. And I think it takes time. And also I think it takes more, I would say, a proactive dialogue. And I think engagement in the end will be better for everyone. And also that's probably why you and I and many other authors decided to write this book together in November last year, right? And one of the authors in the group, in fact, had to drop out because he joined the Biden administration to be a senior official. So I think a lot of the messages we talk in this book are hopefully becoming part of the policy solution going forward.
Absolutely. And that's a really great point. I'm just going to put our the book website again for those who just joined us. And for those who just joined us, we are now in the Q&A portion. I see we've got some really provocative and great questions. I also see some very good friends on the call as well, such as Nathaniel, as well as Paul Mast, who's got we've got some great expertise in the audience here. So I'm really looking forward to your great questions as well as a great dialogue. So Kevin, we've got a question about I've generally found, this is from Paul Mast. Generally, I've found that, I'm sorry, there was one question just before that. So if the US domestic political fight is getting worse towards the next election, do you think that relations with China will get worse too?
I think, this is a question for you because you were in the administration.
So I served in the Biden campaign. I'll share my thoughts. I think that right now there's such a united front in many ways on Capitol Hill that China, that we need to be tougher vis-a-vis China. And I think that that's not going to change anytime soon. I think that in many ways where you are seeing, when you look at how Biden, when he came into office with so many people criticizing him, saying that, he's going to be the continuation of Obama's policy on China. And so he had to prove and demonstrate that he was not going to be weak vis-a-vis China. And as a result, he had to continue many policies of the Trump administration. And in fact, CNN Fareed Zakaria made an interesting point a few weeks ago that according to some diplomats in Europe and elsewhere, they actually felt that Biden's foreign policy is actually more harder vis-a-vis China has actually a harder foreign policy than in many ways the Trump administration. So I think, to answer your question, I think that if domestic political fights get worse get worse towards the next election, do we think that relations with China will get worse? I think in many ways, yes, in the sense that whenever there's an election cycle, we have to find an enemy, right? And so what we call China bashing often occurs in the election cycle, where various constituent groups will talk about the feeling that they're losing out vis-a-vis China, and whether it be Republicans or Democrats will have to use the China card, as they say. So there's definitely that notion that could happen in the future. Thank you for that great question. Next question we've got from Paul. So he writes, generally, I found that people in China think of real estate like Americans think of stocks and bonds. So will a real estate bubble cause disruption beyond that of just economic loss. Kevin, as the economist, I think you've got to take this one.
Sure. Yeah. First, I think, for a lot of countries, even for the US, I think, if the real estate price go down a lot, it actually impacts the society dramatically. When I think many years ago, when we were doing some research about the wealth of the nation of America. In fact, one key point people raised, I thought was such an insight, is that someone may point out that America never had a war on, apart from, I guess, the Civil War, but America never was really, invaded by other countries for the last probably 150 years or, or since independence, except the 1812, the War of 1812 from the British. And so basically there was not a major wealth destruction event, which basically helped the nation to keep most of its wealth, basically the real estate wealth, the buildings, the land, etc., was not really, ruined by war or something. And that's why America is so rich. And the comparison was, Europe, right? After World War II, you got one generation of the wealth. If the wealth is in buildings or in house, in real estate, got wiped out. And you can actually argue about the same thing in China, in Japan, in most of the countries. In fact, the wealth got wiped out during World War II. And that was very, very disruptive. And so I guess the conclusion is that, real estate, if you can keep it in a stable hand for generations, it's extremely, helpful to the society's, wealth and for the growth of a nation. And so yes, the answer is, for any country, if the real estate market crashes down, it's very bad. But again, specifically for China, it is totally true that Paul, your question is that people in China really love real estate, just like Americans love stocks and bonds. I guess particularly stocks nowadays. So and then in China right now, there's really a real estate bubble being bursted, right? Because default and all those. And I think it's very disruptive, and that's why you see the GDP growth has slowed down quite a bit in China. The consumption data has been very bad. I believe I saw the recent number is consumption growth recent quarter was 2%. If you consider inflation, the real consumption growth in China is already negative growth. So I believe majority of reason, I think it was driven by the real estate issue in China. You see a lot of places, real estate price really went down a lot. But if it didn't go down, there's no way for you to sell it. You could, you might want to cash out your property, but there's no one wants to buy it. So it's very, very bad. I think it's very disruptive to the economy in China. And I think that's why we're seeing a lot of bad news right now out of China. And I think it's, but also this is something also about East Asian countries, not only China, but also Korea or Japan, or in the past, Thailand, when there was Hong Kong, when there's let's say 30% or so or more price correction of real estate market, you see the economy to be in really bad shape, some kind of either financial crisis or very much basically the country stops growing to recover from the bubble. So I think you're right that right now I think particularly the real estate crash is hitting China particularly badly.
Yeah, and I'll just add one thing onto that, Paul, very, very brief, is that historically and from a cultural standpoint, Chinese like to invest in real estate because for some of those older generation, or for some who look at the stock market as very esoteric, like real estate is something that they can touch, they can feel, they can understand as a hard asset. So culturally, for many Chinese, when they think of where do they put their cash, real estate is an option that they've historically invested in. I think the broader question that you're asking is that with real estate slowing, what will the fundamental engine of growth be for China's economy going in the future, right? And so I think for many, people are thinking it's going to be infrastructure, right? China will go back to kind of building roads, building bridges as a way to boost its economy as real estate slows down. But we've got a number of great questions.
Yeah, if I may also add something, there's actually a recent article I believe Earl shared with me, and this article is about the title. I don't necessarily agree with it, but the title of the article is "A Decline in China is Even More Dangerous for the U.S." It's an article on foreign policy, and I think it's actually pretty true that because when a country is in decline or in a kind of financial crisis or in a struggle, it tends to act more aggressively toward outside to other countries, because you need somewhere to kind of let people kind of distract people. So I think that's something that I'm a little concerned, because that's why in fact if you look at data this year, the Chinese economy is actually even more relying on the US now, because export import of China to a couple of other countries have been pretty, I would say, stale, or it's not developing, growing much. But the export from China to the US this year, in fact, increased dramatically. And so, out of all the places, if you look at the statistics, America actually is even more crucial to the economy, the economic health of China. So that's why we are in a very kind of critical stage, in the sense that yes, there have been a lot of tensions and all those, but on the other hand, in fact, America, in fact, is even more important China now compared to last year.
Yeah, and that's a great point. If any of you read the Wall Street Journal today, in the second page of the Wall Street Journal, there was a great piece that was talking about that how China's, one of the lessons learned from the Trump administration, the trade war, was China did not want to be held captive to the trade winds, because they export so much to China. So they focused more on domestic consumption. But the problem with that, with COVID, is that China found that its economy is so interconnected globally that now when they try to switch more towards domestic consumption, it had a huge impact negatively on China's economy. I'll see if I can post that article in the chat. But we've got a number of great questions, so I want to continue on. Next question is from Anthony Retta. Do you think the continued oppression of Chinese citizens and suppression of global news from them will continue? Kevin, do you want to take this, or do you want me to start?
I think you can start, and I'll try to add if there's anything I can add. Okay. Yeah.
Oh, great. I mean, look, Anthony, it's a great question. I mean, I first went to China in 1998. You could not read things like the New York Times. You could not access Google. If you were a foreigner like myself, you had to get a VPN, a virtual private network, to be able to access these sources. And so Facebook is blocked. And so there's this notion that, how do you, how will, the great firewall, as they would say, how will China continue to propagate these types of actions? And I think, you have to think of the broader implications of why China is doing this, right? And I think number one is China is trying to protect itself vis-a-vis sources that it does not think are kind of, supporting their primary agenda in China. And I think that the problem you have when Chinese students go abroad and they get experience to these new sources is that once you let the genie out of the bottle, it's almost impossible to put it back. So these Chinese students who are educated in the United States and they come back to China with all of these new ideas and resources, what's the first thing that they do? My friend who studied in the United States, he says, look, I want to have a VPN. I want to be able to access these sources. So I think it's going to be increasingly more difficult for the Chinese government to block these sources. I mean, they're doing their best to block millions of sites. But it's in many ways, I think that and to be fair to the Chinese government, they have been quite successful for the vast majority of Chinese for blocking many of these sources. And I think this will continue. However, more of the educated Chinese who've gone abroad, these people will, as they grow in more prominence as the second and third and the next generations, they're going to continue with these ideas. And so these are going to be the change agents of China in the next, decades in the future. Okay, next question. And I'm going to take 2 questions, if that's all right, Kevin, so we try to get to as many of these questions as possible. What do you think of China's new economic policy of commonwealth? Is it workable? I like this. So this is the common prosperity notion. In Chinese, we call it 共同富裕, if I'm correct, Kevin. What are your notion? What do you take as the economist, Kevin? Commonwealth prosperity. Are you buying it? Is it workable?
Yeah.
And maybe Kevin, can you explain what is the commonwealth prosperity notion? If you can just explain that for people.
Sure. The slogan is essentially it's about how to get people to get more prosperous or richer together, to not let people behind, basically. And I think the reason of this coming out, I think it's clear that globally, in the US, everywhere, in almost every country, you see major, I would say inequality. I would say the wealth gap actually deteriorated dramatically since COVID happened. And in China, it's probably much even worse because of, you got some people extremely rich, and then, I would say the social, I would say the social network, or essentially, there's no something equivalent of, social security in the US, or, all those protections that I would say the most, I would say disadvantaged people in a society got some support from the government, whether it's about housing, medical aid, Medicare, etc. So I think that's the reason in China they were trying to push this, essentially to get some wealth to be more equally distributed. And I think the idea is sound, but I think how it was done, I think it's very brutal. That I think is very, very challenging to. In fact, it's impacting a lot of the industries, and it's creating a lot of I would say anxiety in the society. So I think it's tough. It's very difficult actually to implement a program like this, essentially to try to redistribute wealth to the poorest part of a society. Yeah.
And if I could just add, I think Alibaba is an interesting case study in this, right? Jack Ma, the founder of Alibaba, kind of ran in trouble when he started making some comments that were kind of contrary to the Chinese government, because Jack Ma was arguing that the Chinese government should implement more economic reforms to open up China's economy. And when Alibaba became such a strong company, it also frightened the Chinese government that these companies are becoming quite powerful. And so what happened? You saw Jack Ma being targeted. The Chinese government said that actually Alibaba should be paying and redistributing some of their huge profits to the common people, and in particular to the Chinese government. And so I think that here's a great case study where the Chinese government is being very clear that they want to see Chinese companies who have benefited from their system redistributing some of this wealth back in particular to the government, but also to society at large. I think another interesting case study when you look at this redistribution of wealth currently is this whole notion of the Chinese tax, the recent issue of Chinese government wanting to issue a new tax on Chinese companies. And there's been recently a lot of pushback from Chinese companies on this new tax that the Chinese government is proposing. So it'll be interesting to see how this plays out in the future.
Yeah, interestingly, in the comparison, right? If you look at in the U.S., in fact, Charlie Munger, who is one of, I would say, most one of the best investors ever, probably, and he's a partner of Warren Buffett, right? Charlie Munger had an interview, I believe, a couple of months ago, and he said, what the Chinese government is doing to those, monopolistic companies in China is what the American government should be doing to the American, technology companies who are so dominating the society now. And I think in a very strange sense that I believe it's true that, in the US or in China, they're having incredibly strong market power, and how to regulate them, how to make sure they pay more fair tax, how to make sure they don't abuse their market power, how to make sure they don't treat people to let's say take advantage of people, etc. I think that's something is happening in China, and I think that's something probably is going to happen globally too. So in this sense, I think in the whole world we are seeing some kind of synchronized action. You see the latest global tax deal from G20 countries. I believe President Biden went to the G20 meeting and had Ireland, etc., to increase the tax, to have a global companies to be paying more, I would say, fair share. I think all those in fact pretty much are related. It is a big issue in China, but actually you see more implication globally too. Earl, you're on mute.
Earl, you're muted, and I'm sorry, I don't know what happened to the recording, but we picked it up again.
No worries at all. So our next question is about Africa. And, China's economic engagement in Africa has been quite controversial. So this question comes from Nathaniel. With the recent coup in Sudan and the fact that China has a large investment in the country, what do you think their response will be? Will it be closer to the response towards the coups in Guinea or Myanmar? Great question. Kevin, I'm happy to start with this, and you can feel free to so we've got a chapter on China's economic engagement with Africa. I'm putting it in the chat, and it's written by two of our very well-known colleagues, Owa, who's originally from Malawi and then grew up in South Africa. We also have co-written by Winslow Roberson, who's an expert on Africa. So I think that when you look at what China has historically done in the continent of Africa, it's quite unique. China has historically formed very strong ties with the local government, and in particular the senior leadership. And they do that because they sign these kind of these side deals, under the table deals with the senior leadership, because they have historically wanted to have strong access to commodities to fuel this rapid growth that China's been experiencing. And so what happens when there's a coup? Well, what happens is that China's primary economic and political line then gets cut off, because with a coup, you've got a new player, a new government involved. So the Chinese government has to kind of reinvent itself and kind of reestablish their primary ties of engagement with the party that is in power. And so you've seen this in Venezuela. I have clients who have invested. I know of clients that have invested in Venezuela in particular, and they're very concerned. When Chinese entities give loans to the government, are they going to get paid back? So they're very keen to start and establish loans, very keen to establish contacts at the very high senior levels of government. I think whether or not it's going to be similar with Guinea and Myanmar, I think every case and every situation is unique, but I think there are some important parallels that they will be very keen to establish ties at the very highest level going forward. Kevin, I don't know if there's anything you wanted to add on that.
Not much to be added. Yeah.
Okay, great. Next question from Evelyn Mishad. Hope I'm pronouncing that correctly. And the question is, how will the $300 billion debt of Evergrand affect China or the world economy? Great question. Kevin, you want to start with that one?
Yeah, sure. I mean, it's 300 billion debt of Evergrande. I think is currently in some kind of technical default. And interestingly, though, I believe 2 days ago they did pay a $90 million interest. And obviously they don't have the money. So where did they get this money from? I guess the market chat is, they got it from some Chinese bank. at the direction of the Chinese government. Essentially, I think, Evergrande was told that you got to, try very hard to, to pay something back to the investors to control the damage. And but on a grander scheme of things, not only Evergrande, but there are actually many other developers, real estate developers in China, in some kind of default or in stress. So this is very similar to 2008 in the US. When you have when you have a Lehman in trouble, many other banks got into trouble too, because you got a crossover of all those default, right? You got a chain reaction. And I think that's why in China, at least, they are trying very hard to not make, to get the situation to deteriorate. Evergrande is trying to very hard to got 90 million out 2 days ago to pay something. It was a miracle. No one thought they would actually be paying, after they were already late for more than a month. It's almost like when someone is in, in mortgage default and facing a foreclosure, he decided to, scratch around and find some family jewel to sell and pay another month of mortgage and see how it goes. So I think what's going on, I think it is very bad, the situation, a lot of negative impact. It's hurting, almost all the companies from China who are trying to borrow money from global capital markets. And also it's hurting the whole consumer sector too in China, because when you have a lot of people who essentially paid a down payment to buy an apartment, that's being constructed by Evergrande, and now it's stopped, and they start to worry that what about, I paid, 100K for the down payment, and next year, what if I'm not going to get my apartment? That would be a disaster. And they decided that maybe I should save more and consume less, because I might not get my down payment back. So all those, I think, are already hurting the Chinese economy very badly. And I think that's why they're trying to control the damage. And I think it will, it's going to be, I think the culture in China, let's say East Asian culture, is really, trying to find some compromise. And you see the same thing in Japan, in Korea, in Thailand, when there was those, major corporate default or real estate trouble. You see the government step in and help the kind of companies to arrive some renegotiation with lenders, with the banks, etc., and get it in a very slower pace of restructuring. And I think that's going to happen in China. It's slow pain, but I think they would have to get through it. It might take quite some time, quite some years though.
Yeah, great response, Kevin, and a great question, Michelle. And I think I would only add the following, is that, when you start bailing out a company like Evergrande, one of the quintessential issues you worry about from the Chinese government's perspective is the issue of a moral hazard, right? If you bail out Evergrande, what happens when the next Chinese company defaults? Are you going to be able to bail out them? And what about the next company after that? So the Chinese government is very, very careful in how it's handling Evergrande, because it's setting a precedence. And if it's being seen as bailing Evergrande out, then that has huge implications for other companies down the line. If you think about what happened in the United States with the whole anti-Wall Street movement, I mean, when Lehman Brothers went under, there were all these people who came out and protesting, well, where's my bailout, right? Think about that happening with the United States has a population of about 350 million. Think about a population of 1.4 billion, and you start having people protesting in China asking, well, if Evergrande got a bailout, what about my bailout? So I think the Chinese government is being very careful on how it's handling this and how it's handling its perception of this in China as well. All right. So we have answered, let me make sure I've answered all of the questions. If it's okay with everyone, we've got some new people here. I'd like to see if we could take the poll one last time, and we'll see if anyone has changed their mind with the numbers. And for those of you who did ask questions, there will be a prize given to you. So I will do my best to remember all of you who asked your your questions. So I'm going to share my screen and I'm going to run the poll. While I do that, Kevin, there's one last question that just came out. If you want to go ahead and answer this while I get it set up. Are there many US companies that have been moving out of China since the last 2 years? Do you think that most multinational companies will still be optimistic about China and its market? Interesting. You want to take that one, Kevin?
Sure. Yeah, happy to take this one. What I understand is that there have been a lot of US companies setting up the alternative sites, manufacturing base or supply chain, etc., outside of China, just in case. So they've been, typically, building up another factory in Vietnam, or another factory in Malaysia, or another factory in Thailand, but not necessarily move out of the base in China, in the sense that most of the American companies, they are continuing their operation in China, and actually also might actually even increase their investment in China to satisfy the local need. However, for many of them, when they were exporting a lot of those to the US, they in fact are redirecting some of those flows orders to their newer base, let's say manufacturing sites in Vietnam or India or Thailand. The reason is because, since, the Trump trade tariff increase, it's, it become more, I would say, economically disadvantaged to be essentially selling things from China to the US. So that's why many of those American companies are creating more, supply base out of other Asian countries. And so I believe that's a fair assessment right now, that you got actually a build-up of newer suppliers, but the investment in China is still there and might actually be increasing because, as I said, when many of the Chinese, when they got richer, they tend to actually be more receptive to higher quality goods or service from a lot of the American companies. So yeah, so the situation is more complex than what we would see from media.
Yeah, great. So we're going to launch the poll again. We're going to see if any of you have changed your mind since we launched the original poll, and compare the results. Okay, so launching the poll now, and if you guys can just give me a heads up when you guys see the poll. So I shared poll, relaunch poll. Okay. All right. So let's see if we can beat 94%. Can beat our earlier challenge. That's the highest we've ever got participation rate of 94%. I have full confidence in all of your abilities. So for those of you who've just recently joined, we're just taking the poll again. It's just 4 questions, pretty short. So we will go through those right after you guys are finished.
And in the meantime, I think there's one question missing, so I will address this question. So
sure.
Abdul had a question about do you
Afghanistan?
Yes. And yeah, I think the answer is yes, because Afghanistan is a country, I think, with a major mineral resource. I believe copper, coal, and a lot of other materials are very rich in Afghanistan. And I think, with a new renewable energy push, with a global demand for copper, for a lot of commodities, I believe Afghanistan would become a major supplier to the world. And I think maybe not immediately, because the situation now is still very dangerous in Afghanistan. But I think down the road, I think, yeah, China will invest in Afghanistan. In fact, if I'm not wrong, I believe China already has invested quite some capital in Afghanistan now, at that time with the help of the American authority in Afghanistan to develop those mining operation. But probably a lot of them are on pause now, and eventually I think they will be restarted. Yeah.
Great response, Kevin. I'll just add, Abdullah, it's a great question. I agree with Kevin. I'll take a slightly different approach. I think the Chinese have been very strategic on how to engage Afghanistan. If you look at the when U.S. Secretary of Defense went to China and met with officials, apparently he only met with officials with the Foreign Minister Wang Yi for a very brief amount of time, but the Foreign Minister Wang Yi was able to entertain and see a delegation from Afghanistan and spent hours with them. So that was kind of a kind of slight to the U.S. Secretary of Defense in the kind of level of priority and respect that they gave to the delegation from Afghanistan. That being the case, I think the Chinese are also extremely a bit cautious as well, knowing that, look, although the Chinese economy in China has a lot of cash, they also want to be strategic on whether they're going to be getting a return on their investment. So they're also cautiously kind of, optimistic. They're kind of going in slowly, knowing that there's so much infrastructure that needs to be rebuilt. The entire, when you look at the central banking system in Afghanistan, just being able to just repair roads and just basic, services, I think the Chinese understand that it's going to take time for the Afghanistani economy to get back on its feet. So I think that while they are very eager to invest early, they're also doing it in a cautious manner as well. One other question from QS, and then we can look at the poll. Is there intention to change from free market economy to a planned economy? And just to give the backstop, there have been a lot of kind of interesting remarks from President Xi Jinping, the president of China, on kind of going back to kind of a Maoist era in many different ways. So Kevin, as the as a trained economist, where do you see this trend panning out? Is China possibly going back, reverting to kind of a planned economy? Do you see that in the cards?
Sure. I'm trained in, I guess, macro economics and, econometrics, etc. So it's hard to say, but I would say if I had to guess, right, I would say in the near term, yes, it is actually moving toward more planned economy. You see more like price control. Recently, the coal price being pushed down by the government because there's a shortage of coal, and the price spiked, and the government is trying to control the price. And also a lot of sectors you see actually, private sectors are retreating, right? There's a big talk about, state-owned enterprises are expanding and private sectors are shrinking. So there's some truth to this in the near term, in the short term. However, I think I'm optimistic that over the longer term, people, I would say the leadership or the entrepreneurship class, etc. in China, they are really, it's very difficult, right, to completely go back toward, let's say a complete planned economy, Soviet style. So it's probably more a hybrid economy going forward. The market still would be, still, something toward more like a state capitalism society, if I have to describe this. Yeah.
I agree with 100% that you said, Kevin. I would take a slightly different approach in the sense that I think you're seeing both occur at the same time. I think the Chinese government has made it very clear that yes, from a free market standpoint, excuse me, that they are going to be more heavily involved in regulating certain sectors. We've seen that in particular with cryptocurrency. They've made it very clear that there are certain sectors that they want to see regulated, and they don't really want to see developed in many different ways because they can't really control. In addition to that, I think you're also seeing a very clear and very unequivocal notion that things like data and customer data will be controlled by the Chinese government, and it will not be controlled by Chinese internet companies. And they've made that very clear to companies like WeChat, Alibaba, and others. And so as a result of that, you're going to see more from I guess from that standpoint, more of a planned economy kind of grow. But at the same time, they're also making important reforms that are needed in the financial sector. Much needed reforms in many different ways to protect consumers from an overheating in certain things like the real estate and other sectors. So I think those much needed reforms, I think, are good for the economy, but at the same time, you're seeing kind of a reversion back to a more heavier hand. So I think you're seeing both in many different in different ways. Kevin, we've got a question from last question, and then we'll from Xiaomin Sun, and then we'll go to the polls. And Xiaomin asked, do you see major Chinese companies currently listed in US be delisted in the foreseeable future, given the political environment in this country and the confrontation between China and the US? Kevin, that was your chapter, so please.
Sure. Yes, I see. Yeah, I can guess there will be some more Chinese company being delisted from the US, and go due to a lot of I guess political environment and the confrontation, etc. However, I would say some of the major ones, my guess is probably they're going to still stay. The reason is for a lot of those, when you have massive market cap, let's say several $100 billion, right? It will be it will be a major cost and almost impossible, in fact, to completely delist from US. Think about how much money you would need to raise to get it done. And also for those companies from China, right? They want to be international. They want to go international, and to be part of the US listed company, that is extremely important to them for their credibility. Let's say for Alibaba, as an example, they are expanding in Brazil, and they, and let's say Didi, they're expanding in Mexico, and those companies, if they are able to keep the US listing, it will be actually better for their global expansion into, let's say, of course, in the US, in Canada, Latin America, in Europe, etc. So I think it will be a really loss for everyone if all those companies delist from the US. And I think the risk is always there, but I think hopefully it will be not as extreme as a complete delisting. Yeah,
great point. I'll just add very quickly. I think we'll see a targeted delisting. There have been four Chinese companies, historically 31 companies that have the US government has announced need to be delisted. In particular, China telecom companies that were announced earlier this year. They have until November to delist. And I think that companies that have strong ties to state-owned enterprises or are deemed to be in what we call sensitive tech-related sectors, companies that produce technology that can be utilized in places like Xinjiang to facial recognition, etc. These companies will be under heightened scrutiny in particular. But at the same time, as Kevin had notes in his chapter, I think you're going to find Chinese companies continue to list in the United States. We've already seen some of that with the SPAC ecosystem that is developing, and Kevin is a real true expert in SPACs and how those are developing here in the United States. I think, Kevin, you got a SPAC that is about to list, I think next week, if that's correct.
Yes, that's true. That's true. Yeah, I mean, we are in a globalized, environment, right? There's no way really to completely, let's say, decouple between US and China, or, let's say decouple from China for any country. In fact, I think ultimately, I think there will be, the globalized world is to continue. Just we would have to rebalance for a lot of, to overcome a lot of, I would say I guess the shortcomings of the globalization. But I mean, the trend continues, I believe. Yeah.
Great. All right. So with that, let's look at our poll and go through the figures that we have, which are great. And what's really interesting is that we've got some interesting data that has come from the poll, which is really exciting. So for the first one, are you concerned about the future direction of US-China relations? 56%. All right. So we've got some people who kind of changed their mind. Originally, it was 71% in the first poll. So, we've got some no said 6%, very concerned said 25%, and not sure is 13%. Okay, so we've seen some change there. Second question, are you optimistic about the future of US-China relations? And yes, we will finish on time, Kevin, at 8 o'clock. 56% said yes, they are optimistic. 6% said no. 31% said very concerned. 6% said not sure. Okay, so we're seeing more optimistic, more people optimistic about US-China relations. So that's a change there. What issue is most concerned about US and China? Rising populism, slightly down, but we saw more of a conflict with China, 19%. Okay, so that's change. And then last, what issue are you most optimistic about? Engagement on climate change, 50%. Okay, that's still quite high there. All right. So just wanted to say thank you all so much for this amazing panel. A very special thanks to my dear co-author, Kevin Chen. One last thing I just wanted to share, we have an amazing newsletter distribution list that we will that you can sign up for. I sent you all the link to our website. So if you scroll to the bottom of it, you can sign up. And a very special thanks to Elaine and the amazing staff at Tuckahoe Library for hosting us.
Thank you so much. And we will share that. If you send that to me, I will send it out to Elizabeth to thank you. And I did want to, of course, we have the book at the library, so you can take it out if you're dying to read all the chapters that they shared today. So fascinating. It is also available on Amazon if you'd like to purchase it. And from Springer, right?
That's right.
Yes.
Yes. So
Yes.
We're just so grateful that you could be with us today. Thank you all of us for joining us. And we look forward to more dialogue on this subject. Thank you so much.
Thank you so much for the invitation, particularly for me as a local. I feel so honored to speak. My kids go to the Tuckahoe Library all the time since
It's
very
wonderful.
young. So
thank you for thank you for sharing your expertise. We really appreciate it.
thank you.
Have a great evening now. Thank you so much.
Thanks, everyone.
All right.
Bye.
For those who ask questions,